So, Tom, why this delay? Is this something to be worried about?
Well, Paul, the company, which, as you say, is China's biggest distressed debt manager, it's essentially China's biggest bad bank, putting out a statement over the weekend saying that its auditors needed more time to review a particular transaction. They didn't give any more details than that, but they said as a result of that, they would be missing this April the 30th deadline to publish their 2020 earnings results. It was similar rationale that was used when they missed their prelim earnings back towards the end of March that led to an almost 2-week sell-off in their dollar bonds. It also led, that previous action, to a ratings review by the likes of Fitch and Moody's and S&P of their debt for a potential downgrade. So as you say, this is likely, this statement over the weekend, to cause and reignite those jitters amongst investors, particularly in Huarong's dollar debt.
So, Tom, what are some of the options Chinese regulators are looking at for Huarong now?
Well, we know, according to Bloomberg reporting, that the Finance Ministry, which owns the majority stake, is the majority shareholder in Huarong Asset Management, is looking at moving its stake to a unit of the country's sovereign wealth fund. That's one option. We also know, according to Bloomberg, that the company itself, Huarong, is looking at a sweeping overhaul of the business to spin off some of the non-core parts of this enterprise to try and avoid a debt restructuring, which, of course, is the key issue for bondholders and the key concern. The other piece of reporting from Bloomberg, which involves essentially the big guns coming out, the big bazooka solution, would be the PBOC taking on board, so China's central bank taking on board $15.4 billion of Huarong's debt, essentially a move to try and clean up its balance sheet. And just a reminder that this is a business, Huarong, that now has an outstanding $42 billion worth of bonds that are due, $17 billion of which are due by the end of 2022. So there is an urgency for a solution. Those are some of the issues or some of the potential solutions or options that we know, according to Bloomberg's reporting, they are looking at.